Welcome, ladies and gentlemen. This is your boy Howard, back with another banger. Well, here's the first banger. Um, for those of you who follow me on Instagram, I posted a I posted something that you know caught quite an array of responses, if I must say. Um, I posted on my Instagram whether or not you guys would be interested in me having like an Instagram channel per se that just talks about what's going on, um, and what that means for us young people. Having a panel of people as well, um, maybe having it weekly, a weekly or bi-weekly. Um, just just to give you guys a heads up on what's going on, because not a lot of people, or especially young people, this is mainly designed for young people, because not a lot of young people are aware of how bad what's going on is what is going on is affecting us. And the reason why I said I got an array of responses was because a lot of you instead asked me to do a trading channel, like teach you guys how to trade and stuff, and which I must say caught me by surprise. But nonetheless, here we are. This is going to be a trading channel. Um, so all the trading information will come here on YouTube, and then the talk or the segment with my panel of professionals will be on my Instagram, just to make things a lot easier and a lot smoother. And yeah, okay. So here we go. Today we're starting with the S&P 500 E-mini futures. This is for people who are trading derivatives and etc. And don't worry, as all derivatives, they resemble or they replicate the price of the underlying asset, and in this case, the index, the S&P 500 index. Okay, so here we are on the month chart. As you can see, this is dating all the way back from 2005 until the current situation. And of course, let me, if I pull it out like this for you. Obviously, we have to start with, having trend lines and your support and resistance. Now, if you don't know what that means, then just open up a YouTube, search, support and resistance, to give you a general idea of what we're going to be talking about. Apologies, of what we're going to be talking about on this channel. So, and it's very important that you know, because I'll be talking support and resistance for the majority of the time. Okay, so as you can see here, I've drawn my upper bound from 1st of September, 1st of Feb 2000, which come from the top of the candles on this side all the way to the top of the candles here, the to date at the moment. And the same thing we're going to see from the bottom here, and the come and touch all the way to the wick of this candle here, which was on the 2nd of March. Now, what this does, this shows you, in between those two lines are the likely price movement of this particular asset, this particular index, this particular feature. And when we delve deeper, you will see how they play an important role in determining whether this will be a bullish or a bearish trend. Now, when I say bullish, I mean, the momentum is going up, so you rather want to long that position. And if I say bearish, it means the momentum is in the opposite direction, so you want to short it or sell it. Now, that's the first thing you have to look at, and see whether it creates these lows, create higher lows, as you can see by these marks here, your higher lows, or if they produce lower lows, which we haven't seen at the moment. So, without further ado, let's go into the day chart. Right, I know this is confusing, but don't worry. We'll understand as time goes. So from that big one that we saw, the big trend line, if we can call it, um, we go into smaller trend lines as well. And what that does is basically we're drawing trend lines to see, or at least the range within the trend line to see the short-term fluctuations in prices. Now, if I can give you an example, if you can see this, let me turn this to purple as well, just so you guys can see. So as you can see here, we've got a short-term sort of direction of where the price is going. So I'm gonna shade that or color those lines in purple. The red lines are for um, your long term trend lines, your long-term support and resistance lines. These are all static. The support and resistance lines here are static lines. When we talk about the dynamic ones, we're looking at your moving averages and etc. Your simple moving averages and etc. Those would be your dynamic support and resistance lines. So we're going to focus on static ones at the moment. When we do the dynamic ones, we'll look at dynamic ones when we look at your, not your swing trading, but your short-term trading, your day trading, But that's for another time. Okay, so as you can see here, we've got a shorter one, a shorter range of where a shorter term range of, the direction of the index of the asset. And as you can see, we pass from the highs to the highs. Excuse me there. You want to touch that. I'll fix that now. And the lows here to touch here. We'll fix that as well. But anyways, these will give you, your general direction of where the trend line is going, and you will see how important they come into play in a few minutes' time. Now, as you can see here, we do have our horizontal lines, which are our support and resistance lines. Now, basically, what that means is, if you can see, come up with an example. Yeah, for example, right here, um, we've got a line that that touches, the bottom of most candles, as you can see right here. That is what we call our support line. Now, what that means is, as the price comes down, it doesn't it tests this line, as what traders will say. It will test this support line, and if it breaks through the support line, it now becomes your resistance. We can say the same thing up here. This is your resistance line because it comes up, the price comes up, and it tests this resistance line, and the price rejects, it rejects and it comes back down, and it comes back up and tests that again, the resistance line. So we can see that here, there was some heavy resistance that at this current level, at this current price level, and so it comes back down to test the support line again. Um, so as you can see, the price was trading within this range here. If you can see between these support and resistance lines, you know. And then obviously it tests the resistance again, comes back down, tests the resistance and breaks through, and now that resistance becomes support. And when it breaks through here, we're looking for a retest. Um, as you can see, it comes up, we're looking for a retest, it rejects it, then we know we're gonna go long. So we're gonna go long here, and it tests again. If you have like your trailing stop, maybe you have it over here so that you don't break even unnecessarily. So it tests this again, and then watch this. It goes all the way up. You have your trailing stop around here. It comes all the way up. It comes all the way down. It doesn't touch that trailing stop, and it continues going up. Those are the key secrets to trading, or for any good trader. Looking at having the correct support and resistance lines. That is crucial. That is the, I wouldn't say the secret, but But yeah, the secret, and also knowing your general economics, keeping up with current affairs, that is an extremely important part, which we will get to. As you can see here, what caused this. For the traders, you'll know that what caused this is the dollar crisis. The liquidity crisis. So having a sense of what's going on in the economy, the world economy, the global economy, because we're globalized world. What's going on will help you determine whether or not, for example, you're going to break through this resistance, whether you're going to break through the resistance or not. Recently, we had the FOMC and the ECB, the Federal Open Market Conference, and the European Central Bank. They put out their conference on Thursday and Friday, respectively. So what impact that had on the American market, and especially looking at the forex pairs, which we'll look at in due time, how that played a part. We had Japan, who decided on their level of interest rate. How that played with the world market. Japan right now is a strong currency. And knowing these things can help you in becoming a much better trader. It's not all about technical analysis, which we're doing here. It's a combination of fundamental and technical analysis. Knowing your news and knowing your support and resistance. Okay, we've talked a bit too much here. Right now, we'll start with I've explained support and resistance. I've explained our trend lines, which we'll get to. I've explained our trend lines. Now we go into some real life examples. Okay, so this is on the day chart. We're gonna go a bit further. Let's go into the hour chart. So this is the price movement in the hour. So what I'm using here, these green and red bars are your candlesticks. These are your candlesticks. So for every candle that you get, if I zoom in for you quickly. So each candle represents 1 hour, because I'm on the 1 hour chart. Each candle represents 1 hour. So as you can see here, we've got from the 14th of April up until the 20th. So that's about 6 days, and this trades almost daily. So there are a lot of candles. And as we increase the time period, the less candles we have, obviously. Now, if you're wondering why some are green, some are red, it basically shows you, where the price opened and where the price closed within that time period. So, for example, this 1 hour, if you look at this one, because it's green, we know that the price moved up from its open. And we can tell here by this bar here. So where the bar starts, where my cursor is where it opened from the previous one. As you can see, it opened and then it came up and it closed here. Same thing with this one. It opened here, came up and closed here above. That's why it's green. Now, as you can see, there are these little lines here, which we call wicks. Wicks, that just basically shows, where the price has gone within that hour. So even though it opened here, the price may have come down, come up, come down, come all the way up here, and then closed over here. It's still green because it closed above where it opened. But then you have these wicks, these little lines here that show you, where the price traded. And those can give you an indication of, if it's a bullish or a bearish. The momentum is bullish or bearish. But we won't talk about that. And obviously vice versa with the red ones, it means it closed below where it opened. For example, here, we came from opening here, they went up, closed here, but then it closed all the way down here. That's why it's red. Okay, so we've gotten through the basics, I guess. I talked about the purple lines earlier on. Then obviously the yellow lines are the same thing, support and resistance lines, but for a shorter period.